How's it going, ladies and gentlemen? Welcome back to News Thoughts. As you know, I just don't usually make videos in sequence. Usually I will only make one video in a week. However, I still want to make this video here since this is a very crucial point and I think it's necessary for me to warn every one of you. So the stock I would like to talk about here today is GameStop. So, you know, there is a Wall Street bets and there are a lot of targets that are fighting against those short sellers, especially for those institutions. So GameStop is one of the most hottest stocks. Right now the price for GameStop is $347.5 per share, and in the pre-market it barely hits $500 per share. And in the past 5 days, actually the stock price rises for 785%, which makes its market cap as $24 billion US. So ladies and gentlemen, I believe many of you probably are investing in this stock not because you really believe in its future or its fundamentals, but just purely because many other people are purchasing it and therefore you purchase it. In fact, some of my audience, they also purchased the call options for GameStop. And in this video, I'm going to first give a very fundamental analysis for this company, GameStop, and second, I will explain why the stock is skyrocketing in very recent time. Here, I would like to compare GameStop with two different companies. The first is NetEase, since both companies are focusing in gaming market, while the second is Walmart, since both companies are also kind of retailers. Therefore, I believe these two companies have some comparison with the GameStop. If we take a look to GameStop's income statement, in 2018, the total revenue was over $9 billion. And in 2019, their total revenue was over $8 billion, while in 2020, their annual revenue was $6.5 billion, and the gross profit ratio was always under 30%. More importantly, just in 2019 and 2020, basically, their net income is negative, meaning they're losing money from the operation. And if we take a look to their balance sheet, the current asset is $1.6 billion, while the current liability is $1.2 billion. So that is okay, they just don't have very urgent needs for the cash to just pay the debt recently. And next, I would like to talk about NetEase. For their income statement, in 2018 was over $9 billion after currency conversion, and their gross profit is actually over 50%. The NetEase market cap is $82 billion, and their P/E ratio is around 100. Therefore, if you compare the GameStop with other gaming company, pure gaming company, in my opinion, their margin is pretty low. It's just below 30%. And more importantly, they're losing a lot of money. Since for gaming market, this is a very profitable market, to be honest. However, GameStop doesn't sell its own game. Instead, it's just a retailer. Therefore, the margin is much lower. And next, let's talk about Walmart. For Walmart, the PS ratio or price sales ratio is only 0.74. However, for GameStop, their PS ratio is 4.7. So it's like 6 times higher than Walmart. Basically, both companies are the retailer company. Instead, the GameStop just sell the gaming related stuff, not all kind of groceries. Here is a very basic analysis I can give you. First, GameStop is not as profitable as those gaming company. The second is their revenue is decreasing year over year, which is basically because the market, the gaming market, actually taken by more and more the online gaming companies such as Microsoft, they're developing on this, Amazon as well, and other gaming companies such as Tencent and also NetEase, they're taking this market share. Therefore, if we compare the GameStop with other companies in different fields, you can find that its valuation is just not fair. It's just too overvalued. So next question is, why is stock price will just skyrocket so rapidly? It's just purely because of the short squeeze. So if you don't know what short squeeze is, you have to know what is short. So if someone, for me, for example, if I purchase a short from a certain company or financial institution, basically, once I purchase this, that financial institution, they will sell the stock at that moment. However, in an agreed time period, they have to purchase that stock back. And therefore, if I purchase the short position, basically, I'm betting that stock price will drop in the near future, since as long as it drops, I can make profit from the company. And therefore, right now, a lot of institutions, they are shorting this company since they, just like me, same understanding, same fundamental analysis, they just don't believe this stock price can just be that high, and therefore they keep shorting it. However, a magical thing is like this. There is a place called the Wall Street Bets. That is a place that gathering a lot of people. Though as an individual, the impact may not that be large to the market. However, if there are millions, since for Wall Street Bets, just a basic news, they have over 2 million users. And therefore, if 2 million users are all focusing on the same target to keep pumping money into the stock, basically, that power would just be like a nuclear weapon. Therefore, even though those institutions, they got billions of dollars, however, they still can't fight against those individual investors in the Wall Street Bets or the Reddit traders. And here's the thing, you remember, for those companies, they're selling this kind of short positions, right? They have to purchase the stocks back in prior of the expiry date. And here's the thing, when the stock price is keep rising, right, they just can't wait anymore, since right now if the stock price is $100 per share and next week if that becomes $200 per share and that is their expiry date, they have to purchase the stock price with $200 per share and give it back to the investor. So they just don't want to see that happen. And what happened would be they would rather to purchase the stock price at $100 per share, even though the strike price might be just $10, since they just don't want their loss to expand. And this is just like a chain of reaction. More and more money are purchasing it, even though those institutions, those financial companies, they are selling this kind of short positions. However, in the end, they still need to use a higher price to purchase those stocks they have sold originally back and to give these stocks to the investors. So that is the most dangerous thing. This is just like a volcano or avalanche. When there is a little thing happening there, it would just like grow and explode exponentially. And this is the reason why the stock price just skyrocketed so recently. So lastly, I would like to give my personal understanding for this stock and what it will happen in the future. The first thing is, as I've already talked previously, no matter when, no matter what the situation is, you should always try to avoid the option. Option is kind of high leverage. You can earn a lot of money, have a very huge return. However, you are also exposing in a very big, dangerous situation. It is simply because you have to meet your expectation in a short period of time. This is more like a gambling. It's not an investment anymore. So let's say even though what you think is right, this company is overvalued, you short it. However, just like this kind of situation, a lot of other people, they just don't believe it, and or they just hate you, they just want to do something against you, and therefore they will just use their money to trivial the situation, the reality, and make you lose a lot of money. However, the truth is, no matter what happens, everything will go back to normal. If a stock is undervalued for a long time, say 3 to 5 years, which is where Tesla was, their stock price will get corrected, and which is, for example, they will just skyrocket very sharply. However, those kind of skyrocketing is normal since those stocks are undervalued. However, for this kind of stocks such as GameStop, do you think like they got a very bright future in the next 5 to 10 years? I just don't believe so. A lot of online gaming companies are taking the market shares, and the financials is not good at all. And in this kind of situation, when all those kind of short positions are already met and all these kind of options are stopped for this stock, do you think its price will still remain like such high, like $400, $500 per share? I just don't believe so, man. I just truly don't believe so. And therefore, if you really want to gamble a little bit, you can just put a very little amount of a portfolio in it. Since, say if you put 100% of portfolio in this stock, probably you can just be a billionaire just in 1 week. However, in just one more day, if that something really happened wrong, like all the investors, they're selling this stock, and that will be the tragedy for you, and that can cause you to lose 100% of your wealth. As I'm always saying, investing is not gambling. You should always focus in the long term. The success doesn't mean you can make how much money in this year or this month. Instead, it's just the average amount rate of return and how long you can exist that amount of rate of return over decades or even century. And therefore, in summary, for me, I just won't touch this stock. Basically, there are also a lot of other stocks such as AMC, BlackBerry. For me, I just can't see the truth value in those companies, such as AMC. The balance sheet is really bad and they have a very high risk of getting broke. However, Palantir here is a different story, since Palantir is the only SaaS company that are hot in the Wall Street bets. And therefore, in those kind of scenarios, you can give a very high PS ratio for that. And that is the reason why I think Palantir's stock price is reasonable and I didn't sell its position in my portfolio. In Chinese, there is a saying, 忠言逆耳利于行. In translation, in English, it means even though suggestions and warnings are sometimes really hard to listen, however, indeed, they're good for you in the long term. And no matter if you have already earned 100, 200, or even 1,100% of return on GameStop, GME, the stock, however, I do recommend you to just take some of profits at least and don't make you in a very hard or awkward situation when the price drops. I think my channel should not only tell you where to earn money, but also to help you to avoid those kind of risks and the potential places that you could potentially lose your money. And hopefully this video is helpful to you. Perhaps the share price for GameStop won't drop in the near future. However, in the long term, I believe there will definitely be a correction. So hopefully this video is helpful to you. Thumbs up, like it, subscribe, and see you next time.